So let's move on. Rule number 4, I will say, is the day trading restriction. This is, I think, the one of the most important thing that you should understand if you're planning to invest or trade under $25,000. This is something that most likely not everybody explained to you, and is not out there if you don't look out for it. And someday it can happen to you, and you're gonna be like, what the hell is going on? Like, what is this? Or you just like in a situation that you're like, damn, I hope somebody would have told me this before. But yes, there are restrictions in the stock market. You cannot invest free the way you will like to if you have an account under $25,000, which I don't understand why they do. Well, yes, I understand why they do it. It's kind of it kind of have makes sense, but like for me, because I'm a trader, and I will, well, like when I started with trading, I was like, damn, this thing is so messed up, but whatever. So let's talk about it. So basically, the stock market have restriction to help you not to blow up your account. That's what the government made this restriction for. And it's SEC make this restriction for, so you help new traders or new investors to not blowing up their account. So in this restriction number 1, we have the PDT rule, which is the pattern day trading rule. So this is one of them more important that you should learn. PDT, pattern day trading. Okay, so basically this stands for if you use more than 3 day trades in a week, they will classify you as a pattern day trading. Well, they will apply you the PDT rule, which means that you cannot buy or sell a stock more than 3 times in a week, like in a row. Let's say you only have three day tradings for a week, which means that's what I'm saying, like in a week you cannot do it more than a week. And how it works is really a little complicated and tricky if you don't understand it. But basically every 5 days they will be giving you 1 day trading. And well, if you don't use this day trade, and well, you just stay with it, you actually only have 3. So if you use 1, you will have to wait 5 days to you to recover that same day trade again. So if you use 3 of them in the same day, you don't have no more day trading. So you cannot day trade until 5 days after 5 business days. Doesn't count Saturday and Sunday. So 5 business days, you gotta wait. Let's say you use your 3 day trades on a Monday, you will have to wait till next Monday for them to be available. If you use one of them Monday, then you use one of them Wednesday, and then you use one of them Friday, well, Monday you will get back 1 day trade, Wednesday you will get back another day trade, and Friday you will get back another day trade. So every 5 days you will be getting back this day trade. And if you don't use it, like I said, you will still have the 3 day trades. They just be remaining there. They don't accumulate. You don't get more and more. It's just only 3. And yeah, basically that's how it works. And then what if you break this rule, this pattern day trading? Well, your account would actually get suspended. This is the other one that the other restriction is suspended trading, which means that they won't allow you to do day trading anymore until your account surpasses $25,000. In some brokers like TD Ameritrade, I think they waive this up to 5 times. I'm not sure. I'm just telling you my experience, because it had happened to me before, and I had already get it waived like 3. I think I spoke with a customer service representative, and they told me I think up to 5 times you can get this waived. You got to go ahead and make your own research on your broker and figure out how much waves you can get on this. Actually, some doesn't get you waived. Some don't allow you to overpass those 3 day trades. Anytime you go and actually gonna do the 4th day trade, they just tell you, hey, you cannot do more day trading. And if you're still looking at this video at this point and you're asking yourself, okay, yes, I understand, but what is a day trade? Okay, so basically a day trade means that you cannot it means that you buy and sell a stock the same day. So if you buy, let's say, stock ABC, and one day you buy today ABC at $5 and you sell stock ABC today at $5.05, well, that's 1 day trading because you sold it the same day. If you that apply if you trade in pre-market hours and market hours, or even after market hours. If you sell the stock, if you buy the stock today, ABC today, and you sell it tomorrow for a higher profit, well, eventually you're not count as a day trade. It doesn't count as a day trade because you didn't sold it the same day. That only apply if you buy and sell it the same day. And you only counts when you sell, not when you buy. You can buy the stock. You can buy 100 shares. And if you sell one day, I don't know, you have 100, you sell one day 5, that's one day trading. You still have 95 shares of this stock. And you sell the same day, later on you sell an extra 10 shares. That's 2-day trading. And then let's say later on you make a little bit more profit and you're like, you know what, I might eventually sell all my shares. And you sell all your remaining shares, that's 3-day trades in the same day. You're trading the same stock. Yes, you're selling the same stock. But remember, each share that you sell is a day trade. It doesn't matter if you sell 10, you can sell 1, or you sell 100. Every of those sales is a day trade if you do it the same day. If you do it the next day, well, it doesn't count as a day trade. So really important. I hope you had to understand and try to break it down the easiest way so you can understand that part that I believe is really important for people. And well, let's move on to the next one. And really important is leverage on margin. Yeah, this is something really important. This is something that I think you should know before investing in or trading in the stock market, is what is leverage on margin. Okay, so leverage is basically the ability, like the access to trading with money. Like more higher the leverage is, like you will have more access to trade with this money. So let's say they have two different accounts. They have cash accounts and they have margin accounts. Okay, so if you want me to make a video covering both of these more deeply, we'll go ahead and leave a comment down below if you want me to make a video and talking about which account is better for you to start trading with a margin or with a cash account, and why it's better to start with any one of those. Okay, so go ahead and leave a comment down below, and I hope you can support this video by leaving a thumbs up and helping me out with the YouTube algorithm. So okay, so leverage is basically the access you will have to this money, like to your money. The fastest, more fast, like how fast you can have access to your money. So more leverage you have, more access you will have to actually use your money, or well, basically borrow money from the broker. And so let's say you deposited, if you're trading with a cash account actually doesn't have leverage. With the accounts that have leverage is margin. Let's say you deposited at $1,000, right? So if you don't have leverage, you will actually don't have no buying power, which means that you won't be able to buy or sell a stock. Well, buy a stock, because if you don't have money, you can't sell it. So yeah, you won't be able to buy a stock until 2 business days. Actually, some transactions take from 2 to 5 business days for going into the account. So you will actually have to wait from 2 to 5 business days for that $1,000 to go into your broker account and then start trading with it. And let's say you buy a stock, and when you sell this stock, that money, those funds from the sale, let's say you buy, I don't know, a stock at with $100 and you make $10 profit. So you sell the stock for $110. Those $110 won't be available the same day. You will have to wait up to 2 days for this trade go through, like the buy and the sell go through, and then you get your $110 after 2 days. So basically, is that leverage just save you from not blowing up your account out. So if you basically trading with under $25,000, some account doesn't give you leverage. And so basically, if you do a day trade, well, it save you from not opening the next position, going and doing another day trade if you're going all in a stock. And will it actually save you from not blowing up the account if you don't know what you're doing? If you're somebody that just starting and you have a lot of leverage, probably you don't know what you're doing, and you can buy and sell something and lose money, and then you go buy and sell again and lose more money, and you just keep losing money. But if you have leverage, you actually now have to wait 2 days to be able to get back your money and then go open another position. So probably by that day, if you was trading on a red day, that probably can be a green day, and you get saved by that way. So yeah, that's basically a leverage. I hope I had break it down the easiest way to you. It's basically the access you have to trading with your money. So if you have leverage, you have more access to your money instantly. If you buy and sell, your money is readily available, so you can go ahead and buy another stock and stuff like that. That's basically leverage. Not every broker give you leverage. But guess who give you leverage? Go ahead and sign up with Robinhood with the link down below and get a free stock. You just gotta sign up with $10. And yes, Robinhood do give you leverage. So when you deposit your money and you get approved instantly, they give you your buying power, so you can go ahead and start investing without have to wait 2 to 5 days for get your money in the brokerage. So that can help you actually a lot. And also you have Webull. Webull, you just have to deposit $100 and you get 2 free stocks. So don't forget, if you're wondering where you can start investing, go ahead and sign up with those links down below. So the next topic we're going to be talking about is margin. Finally, we got to margin. So margin is something really important. I know I'm shouldn't go too deep into margin because at this point you're probably not sure. You don't know what is margin, so like I don't think you're gonna be using margin. But yes, there's something that is called margin. Margin is basically trading with money from the broker. It's basically trading when money is not yours. Let's say borrow money. Some brokers do offer margin, like Robinhood. They offer margin. I think if you trade, if you have more than $2,000 in your account in your broker account, they offer you up to $1,000 margin. They can offer you the same amount of what you have in your account. So if you have $20,000, I think Robinhood can offer you up to $20,000 on margin, which means now you can trade with $40,000, even though you don't have those extra $20,000. But you will have to pay interest on this margin. So basically, I think monthly, monthly they charge like 1.6 interest. Every broker have their own interest that they charge, and then trading on margin, or I don't know if it's by every trade you do. I'm not 100% secure on this one of margin, but I'm just giving you the definition of margin. I'm actually don't trade with margin, so I'm not fully control of the topic. But yes, but basically margin is that allows you to trade with money that is not yours, like borrow money from your broker, so you can go ahead and trade with more money. So if you deposit some brokers, if they offer you margin, you should know. Just to let you know from now, if you don't know what you're doing, don't go ahead and get margin, because it's actually trading with money that is not yours. And at the end, if you lose this money, and you're gonna have to end up paying interest over it, and at the long, you can end up losing a lot of money. Not only the money do you lost, but now you have a debt with your broker for doing that. So yeah. And yeah, also something really, guys, be careful out there. Something I want to let you know is that 90% of the people that trade in the stock market lose money. And a lot of people will say this is just BS. It's not true. They just say that to scare us. Not is the truth of the entire stock market. Doesn't matter what you trade in, you can do forex. 90% of investors lose their money. So if you're part of that 10%, just feel grateful and trade smart, not hard. Trade smarter, not harder. That's the way I always keep it like that. Keep things simple as it is. And if you make profit, what I always say, my friend will always say, hey, take the profit and run. Take your profit and run. It doesn't look it doesn't matter what you're planning into. If you're planning to go a long position, like for a long term, and you made profit in the time, like I said, have a plan. You expected to invest 1 year and you made your profit, just get out. Stick to your plans. You never know how things will work out. And something else really important before finishing, I forgot to mention it, is another rule that something else you should know is that what are the terms that you're looking to trade on. So this means that if you're looking to trade on short term, long term, or swing trade, middle term, you can say middle term, it's swing trading. If what you're looking to do, long term trading, swing trading, or short term trading. What's the difference? Well, long term trading, you can actually save yourself more money when on taxes, because if you hold the stock over a year, they only charge a 9% tax on it. I'm not sure. I'm gonna be leaving an image explaining you that about the taxes. And well, if you do short-term position, well, you end up paying more taxes. Of course, you can make more profit if you know what you're doing in the stock market. So yeah, that's something you should actually really know. I always ask everybody that I teach or come to me looking about stock market opportunity. I'm like, hey, how long you looking to trade in the stock market? What are you looking to do? Like just to invest to retire, or you want to actually make a living off it, or you want to go fully like how you can say that, well, fully into the stock market trading, you know. So if they want to do swing trade, short-term trades, or long-term trading, like how I was saying. So the last thing that I want to cover before finishing the video is dividend interest, and this is really important. I know not everybody talk about it, and yes, it's something you should know before going into the stock market. So in the stock market, you have different stuff that you can trade. Well, different funds, like we can talk about stocks, we can talk about ETF, and then you have bonds. So these are three things that you can actually trade, and some of them will actually pay you interest. They have stocks that pay you a dividend interest, and they have ETF that pay you dividend interest, and also bonds pay you interest for investing with them. So basically, this means that the stock, well, this company or this ETF will, whatever company will pay you money for investing with them. Not only you make money by day, like at long term, if they go up in value, you make money also with them. Also, they will be paying you monthly and back money for investing with them. So they have companies that give you up to 6% off. I think, no, sorry, 6%. Yeah, I think up to 6% of dividend, and they have other companies that give you 4, 5, and 3% dividend. So this is something you really got to look into and actually learn, and you can actually make yourself more money and invest safely this way. If you want to hold the stock for long term, we'll actually look into a stock or a company ETF or bonds that will give you a high dividend, so that way you can make more money into it. And yeah, look into a company that actually worth it. You got to be something you like to hold for long term, and you get actually money back from whatever you invested on it. So I hope this information have helped you a lot. We have reached the end of this video, and well, if you haven't smashed that like button, go ahead and smash the like button right now. Go ahead, don't wait, it's free. You know, just take you 1 second, go ahead, smash that like button. Leave a comment down below what you think about this video, if I have helped you in something. And well, if you haven't subscribed, go subscribe to my YouTube channel. Activate the notification icon so you can receive a notification immediately when I upload a YouTube video. And well, also don't forget to, if you haven't get that brokerage, go ahead and subscribe down below. They have the links, get those free stocks. Robinhood, you only have to deposit $10, you will get a free stock, and Webull, you have to deposit up to $100 to get 2 free stocks. So this was On List with another YouTube video. Hey, I'm out, guys.